We're halfway through the week. It's a cold Wednesday here in Seoul, and I'm Lee Ji-yoon. Coming up on today's edition of Business Daily. With the race for the top seat in the U.S. being extremely close, Asian shares along with Korean stocks swung widely throughout the day. Korea's central bank holds an emergency meeting to discuss the U.S. election and prepare for the potential impact on the Korean economy. These stories and more coming right up. Donald Trump looks likely to clinch the magic 270 electoral votes to become the next president of the United States. Markets spiraled out of control in Asia as the votes were being tallied. To talk more about the reaction and election results, we have Shin Se-min joining us in the studio. Thanks for coming in.
Pleasure to be here.
All right, so let's begin with a quick snapshot of the results. I mean, people were literally on the edge of their seats as the projections were coming out.
Yes, it's an extremely tight race with many key states being too close to call until the ballots were being counted. Now, if you take a look at this electoral map here, the final numbers as of now came down to 278 for Trump and 218 for Clinton. Trump really started to gain momentum after some of the key states were called. Starting off with Florida, the Republican nominee managed to grab Ohio, North Carolina, and Iowa. Clinton managed to claw back other key states like Virginia and Nevada, but the losing Pennsylvania contributed to her final slide.
Well, and that was all happening while we saw Asian markets literally in turmoil. It was virtually a sea of red across the board, and investors, and of course, Korea was no exceptions to all that.
That's right. Asian markets jittered across the board, as you said, until ahead of the final results came out. The Korea Kospi closed down 2.25, finishing off a 1958. The tech-heavy Kosdaq tanked at nearly 4%, finishing below 600-point mark. Quite a contrast from the morning when shares opened higher. The Korean won against the U.S. dollars slid 14.50, becoming one of the worst performing Asian currencies. And it's been quite the same for other markets across Asia. Japan's Nikkei 225 was down by as much as nearly 5% shortly after the lunch break, while the Shanghai Composite was down over 1% midday and Hang Seng down over 3% late afternoon.
So markets had mostly priced in a Clinton victory, explaining for all the wild shifts throughout the trading today, and investors fled for safe haven assets.
You're right. Japanese yen touched 101 against the dollars, having dropped 1.6% as of 4:40 Korea time. Gold spot prices saw the biggest climb since the day after Brexit, surging as much as 2.14%, as you can see, to reach $1,301. The Mexican peso, of course, which has become an important barometer, dropped to a record low of 20.05 at one point, breaching the 20 peso mark for the first time since 1994. U.S. Treasury yields also dropped as investors turned to safety assets.
Now, ahead of markets opening in the U.S., futures also took a nosedive.
That's right. The Dow Jones futures plummeted more than 800 points, and the S&P plunged more than 5% to reach its down limit, putting a halt on trade until the market opened in the morning. So definitely a volatile day for a lot of investors.
All right, so what about on the trade front? I mean, we've known the protectionist values were held by both of the candidates, and they were expected to take a toll on the local economy, not to mention the global economy as a whole also. So what can we expect now that we're looking at a Trump presidency?
Well, Ji-yoon, the trade has been one of the key parts of this election, considering that the world's economic growth is largely being driven by the growth in the U.S. and as well as its consumption there. And many economists have pointed out that even if the world's #1 economy chooses to go down the road of anti-free trade, that stance will not persist for long, as it'll start to hurt its own economy. And looking at Korea's export front, with Trump leaning towards becoming the president, it's expected to put strain on trade between the two countries, at least in the immediate sense, as he has reiterated the Korea-U.S. free trade agreement has killed nearly 100,000 American jobs, especially in the auto industry, as well as other key sectors. Now, there had been plenty of concern ahead of the election that a Trump administration would try to push to renegotiate the Chorus FTA.
Right, and tighter regulations on Korean imports would be devastating to the country's economy, considering that Korea has already been seeing continual on-year drops.
That's right. To a certain extent, yes. If the U.S. decides to put a stronger regulations on imports, especially on oversupplied products like steel and chemicals, then that could hurt Korean firms dependent on exports to the U.S. But an expert I spoke to said it won't be an across-the-board problem.
Tighter U.S. regulations on imports does not immediately mean a slump in Korea's exports, but it could mean a lot for individual companies doing business with the U.S. Even if a number of firms face higher tariffs, that's still a small portion of Korean firms.
She added that there's not much the Korean government can do in the short term if companies face anti-dumping tariffs, but they should monitor the industry to ensure they don't become part of the oversupply problem.
Then what about on the monetary policy front? I mean, what kind of changes can we expect on that? Because the Bank of Korea is scheduled to announce its benchmark interest rate this Friday. So what are the expectations on that?
We can start from the U.S. Federal Reserve. The Fed has struggled to get through the election noise, charting a clear path for its interest rate policy. But the election result will inevitably influence the central banker's decision-making process, starting with the FOMC meeting in December. But with Trump's victory, it could largely trigger uncertainty and volatility in the market, probably even derailing a December rate hike scenario. And according to Fed funds futures data collected by Bloomberg, up until election night, the U.S. market saw an 84% chance that the Federal Reserve hikes its benchmark rate by 25 basis points, but that percentage fell to 50%.
Although it's difficult to gauge the exact impact, it sure will be big and have a lasting effect too. After the Brexit announcement in June, central banks around the world were able to bounce off some of the impact by lowering their own rates. But this time around, with the sluggish pace of economic growth we're seeing around the world, there seems to be not much room for another rate cut.
There, what he's saying, that's including the central banks in Korea, Japan, the ECB, and even the PBOC in China, which will have trouble dulling the financial shockwaves just with monetary policy. And also, as you've mentioned, the Korea's own central bank is convening its own monetary policy meeting this Friday, with the market widely expecting the board to keep its rate steady, as it may want to take a step back to gauge the impact.
And I believe Korea's finance minister and related officials are holding a meeting of their own this afternoon to discuss the impact and all that coming from the U.S. election, right?
Right. All financial-related ministers and officials in Korea are all ears as they monitor the election results coming out from the U.S. Finance Minister Yoo Il-ho said that the government will remain firm to push towards with the country's fiscal policies and deal with potential risks. And that meeting comes after a previous one that was held this morning, where the finance ministry said the government will work to maintain market stabilization. They also said the excessive volatility in the market isn't desirable and that the government will take action to curb volatility if needed. So now, with the results all in, we wait to see where the local financial authorities take things from there on.
All right. Thank you so much for all that today, Taemin.
My pleasure.
And for more on what broader impact the election results will have on the local and global economy, Professor Kim Young-hwan from Seongkyungwan University joins us on the phone today. Thanks for connecting with us.
Yeah, happy to be with you.
All right, so with the U.S. leaning very much towards a Trump presidency, what are some of the things that Korea should look out for to minimize short-term and long-term negative effects on the Korean economy?
Well, in case of short-term negative impacts, we are already suffering, as reported before, in financial market, and foreign exchange market has been heavily affected negatively, and Korean won currency has been depreciated a lot, although the scale is somewhat lower than the other more heavily affected economies like in Mexico, but still, instability in foreign exchange market is quite unworried features, and also, as has been reported, Korean stock market has dropped sharply. But I think this kind of short-term effect in financial markets might be stabilized within a few weeks. since kind of massive capital outflow might not be really a kind of case in this case, since the impact of this election is actually suffered globally, and we are not the only victim. So in that context, this short-term negative impact in financial market might be stabilized gradually. And the more worried feature would be so-called a midterm or long-term effect, especially in case of the Korean export industry is mainly suffering from the protectionist policies, which has been already predicted and committed by the Trump kind of regimes. So possible story might be a renegotiation of the Korea-U.S. FTA would be a kind of almost a sure things, and all the other so-called non-tariff barrier might be increased, which might be applied majority of the major Korean export industries. So kind of expected a negative impact on Korean export industry with respect to U.S. market might be a real big negative issues. And another actually bigger issue would be U.S. economy itself will be very heavily affected in negative terms since the increased labor cost due to the Trump's kind of immigration policies, and also we expect his the unique kind of so-called promotion policy for economy, say under the title of the massive investment in infrastructure, is expected to lead nowhere in really upgrading U.S. economy. So we expect U.S. economy might suffer a kind of quite a long-term negative impact, which might eventually affect the global economy. Then we also will suffer kind of in terms of the global this kind of reduction in demand for our export industry. So that's kind of major issues we are concerned in economic terms, and also we are quite worried about increasing cost for the kind of securities in Korean Peninsula due to the increased demand from Trump regimes for the full payment by the Korean side for the U.S. Army in Korean Peninsula. So all those aspects I expect will affect Korean economy negative in midterm and long term.
All right. Thank you so much for your insight today, Professor.
Thank you.
Turning now to the latest job figures. Job growth remained sluggish last month. This as Korea's corporate restructuring drive takes a toll on the manufacturing sector, especially in regions where the country's major shipbuilders are located. And our Kim Min-ji breaks down the numbers for us.
Korea's job market remained sluggish in October. Statistics Korea says the country added 278,000 new jobs last month from a year ago, bringing the total number of employed to almost 26.6 million. The figure has stayed below the 300,000 mark for the second straight month. The ministry attributes the feeble growth to the government's ongoing corporate restructuring drive, which has taken a toll on the country's manufacturing sector. Jobs in the manufacturing industry have fallen for 4 straight months.
Jobs in the manufacturing sector fell 115,000 in October, expanding from the previous month. Although the overall figure job growth improved slightly on month, the corporate restructuring drive and slump in exports continues to weigh on the manufacturing industry.
Despite job growth in the retail, accommodation and dining sectors picking up, boosted by increased domestic spending and tourists due to the country's sales event last month, it wasn't enough to prop up the job market. In fact, the country's jobless rate sits at 3.4%, up 0.3 percentage points from last year. It also marks the highest figure for the month of October since 2005. For young people, the situation wasn't any better, with the youth jobless rate at 8.5% last month, the highest for the month of October in 17 years. Prospects aren't bright down the road with lingering uncertainties. For one, the fallout from the ongoing corporate restructuring push is expected to expand, and an anti-graft law that took effect stands as a downside risk. The government has vowed to make sure the budget supplement is implemented smoothly to breathe life into the economy and in turn improve job market conditions.
김민지, Business Daily.
Korea's economy may be overly dependent on the construction sector. According to the OECD, Korea is the only country that relies on construction for more than half of its growth, among countries with an on-year economic growth of more than 2%. Comparing second quarter GDP figures, the international organization said Seoul's investments in the construction sector contributed 1.7 percentage points towards its 3.2% growth. With the government announcing measures to cool the property market earlier this month, experts say a sharp dip in construction investment is inevitable next year, and that the government needs to mobilize all policy measures to fill the gap with other business investments. And that wraps it up for today, but we'll be back tomorrow with more business news that matters to you. Also, stay on Arirang for more updates and analysis on the U.S. presidential election throughout the day. Thanks for watching.